Nice. All right. Okay, everybody, we are back. Let's see. I see Daniel Gisman and Fernando. One of you two, please let me know if everything looks good and sounds good. I had to do a improv temporary setup here, so just let me know if you wouldn't mind. Look at freaking Link just dying over here. What the freaking hell? Good day, good day, good day. Anyone? We good? ERD, just let me know if we're good, Fern. Fern's just like ERD USD. Oh yeah, by the way, we're good. All right, thank you. Unbelievable, this guy. Okay, anyway, we are back. It is it's the end of July. It's Sunday, July 26th, 9 o'clock p.m. Eastern Daylight Time. Yes, impromptu setup. Had to, we're packing because we're moving, and so everything is different now. So I'm pretty sure the resolution is also different because now I'm using different monitors, temporary monitors that are easier to move, and blah, blah, blah. And everything on my screen looks huge. So I'm assuming it looks gigantic. But anyway, make a long story short, Bitcoin, good push. So we got the push early in the day over here. You can see the high side right here, but you can see exactly where it stopped, 10,150 and 00 cents. Now, we all know what that means. We've talked about this in fairly good detail in the past. When you have exact numbers like that, especially like 150 and then zero change. Now we're looking at Coinbase that does change into the pennies. So when you have zero change like that and it's a perfect number, that means that there's liquidity still up there and not all of it got filled. At least that's my opinion. So this would be a heavy area where there's still plenty of people who want to sell at that level, who want to sell at 10,150. Now, so far today, we did open up and push right to the retrace 618 and found resistance again at the retrace 618. You do also have your prior high over here. So your first high at 428, then you had a lower high, lower high, lower high. Then you had a higher low, swing, fail, break, sweep the top side, come back, wick retest, and from there was the push. So right here, you had two opportunities to buy if you wanted to get in on that potential long. So far, the long is good. The falling wedge did play out. So for anybody who traded the falling wedge right here, that was good. It was a great trade. So you just pop that on right there, right about where it breaks out, and then follow that up. And so, of course, I did it this morning and it was right. Now it looks like it's just shy a little bit. But anyway you look at it, it's certainly close enough to consider that a good a good pattern, right? So the falling wedge is now done. We could save the line. We can get rid of the wedge itself like this. But we can save the trend lines, right, if we want to. So, yeah, see how, everything's huge? I don't know. Things look weird. But we can save the trend line for now. That's fine. We could always come back down and bounce back and hit those. So we'll see. Now, we are building a crab pattern, which is interesting. It's not fulfilled yet. It would need to hit this area up top over here, which would then give us, a little bit of, this almost double top area. But you have to look at these highs from before. Look how close they are, right? So you have 10,540, 10,522, 10,428. So if we were to get something in the 10,000, 420 zone, 400 zone, that would be right in line with this triple series over here of rejections. One more rejection over here would really be no big deal, and that would lead us down, all the way back down to the low side of this giant symmetrical triangle, which would then, potentially bring us, let's say, in the ballpark of, 4,300, give or take, which would actually be a really good level to check. That would essentially create a swing fail to the downside off the 14K downtrend. So just like you got a swing fail right here to the high side, which is essentially just, you failed to make a lower low, right? That's all that happened. So you just failed to make a lower low over here, and therefore you get a swing fail. Just like over here, you failed to make a higher high, so therefore you get a swing fail. That being said, that would be a fairly good thesis for, a 6 to 8 month projection of pushing all the way down, capping off this level. Could potentially take months, get us into like October, November, in that ballpark, even December, really. It could take like a few days like it did this time, or it could take, a good long amount of time where it sort of breaks up and sweeps down and fails and then comes back and does all that jazz. And if it does all that nonsense, it'll waste a whole lot of time. And if that's the case, creep over to like these levels back over in this zone. And then you'd be looking at creeping into the 43, 4200 zone again. So if we are able to do that, it would make a lot of sense. We know that there's a ton of buyers in this area still, just based off the wicks that came down here. Plus on the low side over here, so you're looking at, 38.58 and 00 cents. So it's a nice even number again. No wacky sort of, cents, pennies, all that junk. So it's also interesting if that were to then push up, then you have the much larger view of the gigantic swing fail. And then that just helps the larger symmetrical triangle, which you can see over here on the weekly. Speaking of the weekly, I know everybody wants to know what's going on here. So you did break and close above the all-time high 382, which is the level that was needed. That's right here. Now, again, we talked about this last week and the week before. Unfortunately, there's nothing for us to do at the moment. And any trade you take will obviously be a risky trade, right? And because nothing is sound here, then it's just a matter of, how comfortable you are in taking a short at these levels, right? Or potentially taking a long and trying to come up and hit that larger swing fail. The problem with the long is you don't really have a big play here. The weekly level now for the long would be like 10,815 up to like 10,900. So this area right here, if price is to come up there, the expected result is rejection. And the reason for that is it's your very first time coming up to the swing fail. You may think that this is the first time coming up to the swing fail. It's not. This is what creates the swing fail. So the swing fail starts at your anchor one. Your anchor one is your top level. This is the all-time high. Now, when price drops down and then pushes back up again, it fails to make a higher high, just like we talked about here on the very local side of the 10,428 downtrend that we've had over the last few weeks. This is just the same exact thing, just on a larger scale. So this is your high. This could be 10,428 if you want it to be. This could be the failure over there, the first lower high, and then, a lower high, lower high, lower high, lower high, lower high, right? But that being said, when you come back up to that level, the very first time you come up to that level, you expect resistance. You don't expect it to break through it on the first shot. Sorry, I need some coffee. So if that is the case, it's very low reward over here. I think we measured it yesterday. It was a 7% trade. Now let's take it from like today's open. Well, now it's a little bit better, right? You're approximately 9%. It'd be a 9% trade. And that's not bad. I mean, 9% is a great trade. I think I would rather personally watch how this week plays out. And if it does approach these levels, I think I would be building shorts. And I think I would be building a fairly massive short. And I'll tell you why. When you sweep this high side over here, now, I know we always talk about structure. You break the structure level, then you're... What is Link doing? Link is a mess right now. Fernando, what did you do to Link? It's a freaking nightmare. I have it on one of the other screens just on the 5-minute. It's just like you can't even trade it. It's a total disaster. So anyway, when you break structure levels, you expect, now that let's say you come up here, right? So you break, right? You broke 10K, you broke 10K, you broke 10K. And now everybody's saying, well, finally you broke 10K. Now, we're off to the races. Well, not so fast. You would think so, right? But that's also where all of the liquidity is. Everybody knows that. You don't gotta be a rocket science to figure out that everybody's up to that one level. So if that's the case, where do you think the liquidity is for all the short orders? Yeah, they're all right there, stacked up. Remember we talked about double bottoms the other day? And in the Forex market, this is like all too common, right? So you get a double bottom. The problem is, right, you don't get like that good double bottom that you would want. What you normally get is this little sweep down here. And the sweep is because the people in charge, and I say that because there's literally like 5 banks that trade Forex and then like retail traders. And they run the roost, right? They know this. It's not a secret. It's not a conspiracy. It's nothing like that. It's just they're moving around, hundreds of billions of dollars, and everybody else is moving around like $1,000. So when you have this double bottom pattern play out, and you see like, price was pushing, from a high level up top, it works its way down and finds a really good bounce. And this is like the first sign of a good double bottom is that rejection is very strong. It's not like price comes down. Let's say this red part will be the area of support. It's not like price comes down and then it just kind of like does this and trickles out over here and does some crap like that. No, it's like price comes down and it just V-bottoms out of there. And that's your first flag, right? That's the first flag that says, I should probably pay attention to this. Let me see where it bounces up. And if you grab your fib from here to here and it pushes up and it's around the 50%. Forex loves the 50, right? They love the 50. So if price comes up to like the 50% and then has a really nice sell-off, as nice of a sell-off as you did a buyback, now you're looking at double bottoms. And that is where everybody will buy. Retail traders will buy this level 99% of the time. And 100% of the time, they're going to stack their shorts right here. I mean, they're going to stack their stop losses right there. And so what do the powers that be do? They drive the price down, they scoop up all of that liquidity, and then they run. That's it. So we could see that in the crypto market as well. It does happen. I don't have any examples on me, but it does happen often enough where you could be like, damn, that's pretty janky. But what they'll do is they'll sweep the level and they'll push up through to make everybody think that, yes, we finally broke that level. It's time to go long. It's time to go long. It's time to go long. What are those longs? What do those longs end up being, right? If you're buying, somebody's selling, right? So if I'm on the other side and I'm trying to fill a short order, I need buyers. I need buyers to buy that level to fill my shorts, right? You have to remember that when you're shorting an asset, a security, a token, Bitcoin, Ethereum, whatever, when you're shorting something, you're borrowing something and you're making a bet, more or less. You're saying, dude, let me borrow a Bitcoin, right? Let me just borrow that from you. I'm going to take it upon myself to sell it at this level, at 10,000. Right? I'm going to sell it. I know I still owe you a Bitcoin, but what I'm going to do is I'm going to buy that Bitcoin back at 8,000. Because all you want from me is your Bitcoin back and then maybe a little bit of, a little bit of interest to pay on top of that, that's fine. If I buy it back at 8,000, I just pocketed $2,000. Right? Now I take that $2,000, I pay you with your interest, I give you your Bitcoin back, and we're straight. You have interest, you have your Bitcoin, I made money. Right? A lot of people get confused with shorts. It is nothing to be confused about. I myself was completely blown away with shorts. When I first started, I had no clue what a short, it didn't make any sense that I can make money on an asset that's going down? Who's paying me? Like who is paying me? And the premise of the whole thing is very simple. It's very, very, very simple. You're borrowing it so that you could sell it at a level that you think it's high because you think you can get a better deal. That's all it is. It's nothing more than street hustling. It's the same thing, right? You have a bunch of umbrellas that you bought on consignment or whatever. So you go to the umbrella manufacturer and you're out in Rome and everybody's on vacation and it looks like it's about to pour out. So you go to the umbrella guy and you're like, yo, let me borrow 25 umbrellas. And he's like, I don't know, man. You know, that doesn't seem right. And like, look, dude, like, let me just borrow these 25 umbrellas. Say, all right, fine. So you get the 25 umbrellas. It starts raining. You know that he used to sell them at $5 a piece. You know that exactly when it starts raining, you could sell them for $10 a piece. No questions asked to every tourist on the street. You sell all those 25 umbrellas. You go back to him the next day when it's sunny and bright and nobody could care less about a freaking umbrella, and you give him 25 umbrellas back at the going rate of $5, not $10. What'd you do? You just doubled your money. You pocketed money on money you never had. You never had it to begin with. You had to borrow it. That's all shorting is. All right? So, in other words, if I want a short, I need the other side. I need the buyers to be bullish. Because who the hell is buying 10,800? Tell me. Are you buying 10,800? Are you buying that level right before a breakout? Are you buying the level right after a breakout? I know traders that will. I know traders that'll put a stop right on there and they'll trigger. The second that thing crosses the line, they're in. No questions asked. Majority of the time they're going to be filling shorts. All right. Now on a spot exchange, you're not filling shorts. What you're doing is the guys that are selling, they're selling spot. Maybe they were long back here at 8. Maybe they were long at 7. Maybe they were long all the way down here at 61. Maybe they were long down here at 55. It doesn't make any difference, right? When they want to go sell, they sell. Somebody just said they want them. What is wrong with you guys? Hold on. I know of all the weird stuff on here, there is an umbrella. Okay, very good. Now that we have the umbrella symbol over here, everybody can be perfectly happy. So anyway, that's a personal thing. I need to spend a little bit more time on the longer time frame charts to redo a larger thesis, something that dives into the next 8 to 12 months. I know I have a very old one. I don't know where it is, but it essentially has this giant situation sort of playing out, and that would be the case. But again, I digress, because if you do break through this and you come back and you retest it, you can't look a gift horse in the mouth, right? It's a breakout retest. It's time to buy. You have to check your bias at the door. Theories are great, right? But you have to understand the price action that's right in front of you. Right now, the reason for the hesitation for me personally, and I talked about this in the morning update, we talked about it yesterday, is the fact that this broke over the 382 and we lost everything. This broke over the 382 and we lost everything. So I'm for two. The failure came on the next week. 2 for 2, failure was on the next week. So I'm not exactly jumping for joy over here that we're over the 382. Yeah, we're over the 382. Whoop-de-doo. Show me you can trade over that level for 7 days. Otherwise, all the bulls have burned their bridges. They're not getting me in here long because I refuse, right? I'm not going to do it. I'll wait 7 days. I have no problem waiting. A lot of traders can't wait. I can wait. I have absolutely no problem waiting, because if it does end up doing this same deal, I want no part of it. I want no part of it, right? And if it pushes up to these levels, I'm looking to short the swing fail anyway. So what am I going to do? Go long up to that level and flip short? I can. Let's see what the price does. Right? And speaking of that, what would be a reason to come down? So we have your CME futures gap. Right? Now it's a fairly large gap, right? And you're looking at 96.15 up to 99.25. It's a pretty decent gap here. Generally speaking, these get filled the same week, if not the first day, right? So be very, very, very cautious of this play right here that could potentially drag this. Yeah, I should have done it that way. That could potentially drag it down 3.12% or $310 just to fill the gap. Now, it could fill the gap and push straight back up again, or it could leave this gap here and just go off to the races, cover this gap over here at 11.9. These are all possibilities. Speaking of the other stuff, right? Not the chart related stuff, the other stuff like volume right here. Volume breakout on a Sunday. On a Sunday. I don't even know the last time volume broke out on a Sunday. I'm looking back at this. Every vertical line is a Monday. So Monday, that's a no. Monday, that's a volume breakout. So back here, May 10th, there was a sell candle volume breakout. All right, this is a buy volume breakout. And then you have to remember that if you're looking for confluence, right, confluence, I think number one when it comes to confluence is volume. Right? Because again, you could have a gigantic candle with only Fernando trading it. Or you can have a gigantic candle and it's, 500 million people trading it. It's a very, 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 very big difference. So when there's a ton of volume, you tend to say, okay, that was a strong move. Now this candle here has a huge wick to the upside, right? Which we talked about these huge wicks to the downside. Remember, you don't want to get fooled that this is very bearish when that's actually all buying. Right? So you might have massive volume. Now that's not a great example because it's a white candle, so it ends up being a bullish candle. You like to find one like this right here. So this candle in particular, right there. So this candle, now it's also like a hammer candle as well, but what we're looking at here is you're going to have a volume breakout potentially, right? It's going to be a very strong candle, but it's not actually bearish. Although you think it is because the body's black, right? So it opened higher than where it closed. It closed lower, right? So if the candle opens at 91.38, but it closes at 90.74, you lost $64. So that means, right, that it's a bearish candle. But that's not true. That's not true. That's only the surface area of what price action tells you. You have to actually look at the candle in the context of the candle. What happened in that candle? What went on this day? And this is all buying. So a lot of that volume came from the buy side, not from the sell side. Sure, you had to sell it down, but they bought all of that back up, which means the bulls were actually in control from the low side down here at 89.05 all the way up to 90.74. This could have been a very, very, very heavy bearish candle with another $168 south, but it wasn't. So you have to keep that in mind with this candle right here. Absolutely a lot of buying. This is also a lot of selling, right? That's a lot of selling. Now, so far today, we're already up $139. Originally, we pushed up to the retrace 618 and we found resistance. So again, you're going to get multiple opportunities here. Now, this potentially being a blow off top, it's not the wick you would want. You want a wick like the China pump, right? It's very, very hard to mistake the two. Look at that wick. The wick is bananas compared to the body. It's absolute bananas, right? So that, like the China pump, that's a blow off top. This over here, it's close, but it's not there. You know what I mean? Look at the wick. Look at these wicks, right? Look at these wicks. That wick's crazy. That wick's crazy, and it kept going up, right? So this wick, I'm not going to call that a blow off top. I think that would be a waste of time. All this is, that's Sally getting executed up top. That's all. They're throwing Sally up there, and they want to know, what are they fighting up top? What do the bears have to offer? Because if the bears are rolling in with 3 tanks, then they're going to come in with a dozen tanks. They're going to cruise right over those guys, but they want to know what they got ahead of them before they make that move. And that's what you're looking at over here. That's just a test. That's a test to the high side. So the goal here, right, is if we push up, but we don't cross this line. You don't cross 10,428. You can get all the way up to 10,427. But the idea would be not to cross 10,428. Now, if you do, then the obvious level you're going for is this swing fail. On Coinbase, it looks like it's 10,716, and that's this swing fail here coming from the all-time high down to 14 and down to whatever potentially we hit it at. All right, so that's where we're at right now with Bitcoin. So, you know, it was an impressive last few days for sure. Right, for sure. The problem that we came out of range didn't really give us a whole lot of buying down here. Playing this swing fail would have been extremely risky because you're just inside 9K range over here. You're not really doing that much. All they had to do was find resistance at 92.40, which they did 2 days in a row, and then drop that back down below the retrace 50 and pushing to 86.32. And it was this candle that changed everything on July 21st that swept it and broke through. Now, we went into this range prior and lost everything again. But the difference here was you broke your falling wedge. You broke the falling wedge. So the falling wedge pattern did play out, which is great. So anybody who took that, that's awesome. And then you had 2 wick retests over here, the buyback levels after you smashed this previous structure lower high, I should say. So again, 2 more opportunities to get in there. You even had a third opportunity on the all-time high 382 as you came back and retested that level for a third time, right? All 3 of those. So you can't say like, I didn't get in the long. Like, you had all these opportunities to get into the long. Is it a little late to get into the long now? Yeah, I don't think I'd be touching a long at the moment. But, I mean, if you're playing a weekly chart, then, you know, maybe a retest back down, you'd be looking at, you know, the all-time high 382 or the top of range. And the top of range over here, we're just getting back into, which is like 10,173. You can see we hit the top of range over here and smashed down. Now, that top of range is because of these candles over here. Weekly back in February 3rd and February 10th with resistance at February 17th. These candles are the reason why that range is so high. Okay? So 10,173 up on the weekly, that's the opportunity here. You could potentially see this wick go back down, maybe retest your all-time high 382, which currently the 9 EMA is sitting just under. So it would be a perfectly acceptable test, but at that point, there'd probably be so much momentum from the bears that it would be unlikely that the bulls would be able to recover, and it would turn into one of these here where you would simply lose everything that you've gained over the course of the prior week. All right, let's grab some coffee and say hello. This is our last Sunday night together, too, guys. I know, because we have we got a couple extra cats in the house, don't we? Anyway, Daniel Gispan's in the house. Fernando's in the house. Cookie Pie HB is in the house. Very good. Jared is here. Michael McBride is here. Very good. Good to have you. Mark Hicks is in the house. G Logos here. Mike 21. Essence VFX. Mike 21 again, and Mr. Carana. Very good. Okay, so buenos noches. The moment of truth. Pump or dump at this level. Well, according to you, this would be a pump. It's a $142 candle. I don't necessarily call that a pump just yet, but hey, we'll take it. Now, let's see. Howdy. Very good. Good day. Hello, hello. ERD, yeah, let's take a look at that. All right, so let me pull that up and then we'll keep checking the comments here real quick. All good, very nice. Very good, very good, very good, very good. Where is the Bears? The Bears got caught with their pants down. That's what's going on with the Bears. Let's see, so now what are you waiting for to enter 96.50? Yeah, so again, for me, I don't like the weekly. So I'll probably let the week play out. Plus, I'm like beyond busy. I'm packing. I'm moving. I got to load a truck. I got to unload a truck. So it's going to be a very, 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 very busy week for me. So managing any sort of non-swing trades is probably not what I want to get into. But if it's going to be a larger, longer, like a 2-week, 3-week, 4-week swing, that's something I'll probably get into. This way I can just set it, forget it, and walk away. All right, let's see. Great evening. Very good. Link has left the Basement Kingdom. Oh, no. Annoying coin to trade at the moment. Yeah, for sure. I was watching I had the 5-minute on another monitor, and it's just like, it's a mess. It really is a mess. Short that area of BTC. Don't you think that FOMO could kick in and breach the resistance? Yeah, of course. Yeah, it's always a possibility. But remember, right, we took a short on, where was it? We took a short over here, remember? And our stop was 10,540, right? And we hit 10,522, and our stop was like almost liquidation, right? Because remember we averaged into this position. And it was looking really bad for, up until this candle. It was still looking super dangerous till we got this big breakdown, and then we got the swing fail. So then I felt a whole lot more confident. I think we added again at 92 over here for the retest level. So yeah, like all things worked out. We might have added a little bit more over here. I can't really remember. But yeah, remember, like you had to have a fairly large set to take that trade. So I have no problem taking it. Again, just like every trade, can it go the wrong way? 100%. That's what stop losses are for, right? So I'm not, it's whatever. It's a trade idea. It's a trade idea that I generally take. I'll short the first retest of a swing fail. I'll especially short the first retest of a 3-year-old swing fail, especially on Bitcoin. Right? So yeah, I don't have a big problem with that. Let's see. What would your stop loss be? So if I was up top, if I was going to play, so I got 2 trades here, right? The first one is the crab. Whoops. So the first one's the crab, right? And the crab gets me up a 168 off that level at 10,395. So that would be my first short trade. And that's trade off an advanced harmonic, right? So if I were to do this move here, I would be 10,395, and then my stop here with my potential TP, my first TP being like right around the pullback 382, I would likely put it above the swing fail, right? So I would have to just double check this, which I didn't do earlier, but let me check now. So it'd be 6 down and 3 up. So that's fine. 6 down, 3 and change. So just under 2 on the first TP, and then the second TP down here at the 6-1. So that would be 9%, right? Which is perfectly acceptable here. And then at that point, you could break it back up to just above the D. So that would be the first trade if I were to take that one. If I were to take the larger one, which would mean essentially almost where this thing gets stopped out, I would be starting to sell at 10.5. I would probably sell all the way up to 10.8, allow a little bit of a push over. My stop at that point, I'd probably have to do a dedicated 2 or 3% move. You know what I mean? From here. So because the target level is so ridiculous, I don't want to make it very obvious because I don't want to get knocked out of the trade. But I'll allow an aggressive push. But that trade for me, we're talking about, really screwing the corn here. So potentially, let's say over the course of, let's just say it takes a month, potentially like a 60% move on Bitcoin, right? And that's like ridiculously aggressive. But remember, I'm still in a long from 42, whatever, 42, I don't know, 75 or 80 or whatever it is. So I'm still in that long, right? At 133%. So it's not like it can't be done, right? It absolutely can be done. The great trades are the ones that everyone dismays. That's usually how it works. The great trades are the ones that everyone poo-poos and they say no way, say it can't be done, and then it happens right in front of their faces and they're like, wow, I didn't see that coming, and then they want to jump in. Like, well, where do I get an entry? Nah, man, the entry was way the hell back there, dude. The entry's not now, right? The entry was way the hell back there. But those trades are the ones that are like, you see it in advance, you can sort of feel the pulse of the market, and this one was fairly obvious, right? Because although we came up here and things got very aggressive, right? This was also like just a really good area because that China pump didn't look like it was, it was like it pumped artificially. This thing just wanted to go down. But then this trend looked very, very, very good. And that's where things started getting very shaky for me. Because remember, I took the short early, and that was off of, oh man, I gotta find it. That was off of, definitely not that. I'll find it. So this one. Right, and so the theory here was after every major move in this 14K trend, right, we came back up to the 786. So big pump, drop down, 786, rejection. Big drop, right, big pump, big drop, push up, 786, rejection. Right? Then you had this big move over here. Now that was your first failure, right? You didn't get a lower low, so you can't count this one. It's part of the trend, but it's a failure in the trend. So we used the next one, which is this move up and that big drop down, right? And that push back up on the fib, right? Top to bottom, 786. So when we were looking at the next move, right? That was the big plan, was like, all right, well, if we could push up to the 786 all shorted. The problem is we went almost to the 1-1. Like, watch how it all played out. Like, yeah, we took that short here at 95, right? And then we had to ride that bastard up to 10,522. But then we took the drop. We took the drop all the way down here, but we got out at 55, I think. And then I had old orders for the people that have been on the stream for a long time. You guys remember, I'll never stop telling this story, right? How everybody in the market got screwed right here on that pump. I'm still waiting for that 42 to come back and grab my level, and it finally did. It took about a year, right? But I finally got filled. And that was my fill long that I'm still in now, right? And I know a lot of people ask, like, well, like why are you still in that trade, right? And the obvious reason is, if you listen to the stream, structure, right? We have not broken 8632. So technically speaking, as super crappy as this looks, we're still in a long. Technically speaking, we're still in a long. So there's no reason for me to get out yet. I haven't been given the green light to get out. And I don't have any problem selling down here, right? I don't have any problem selling at 86.32. I booked profits along the way. You know what I mean? So it's not really a big deal. It's managing the trade. So for me, it's just a matter of, if we're going to break structure, if we're going to really, 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 look like we're coming down. And this was very close. Very close. Swing fail right here, I could have gotten out. And I would have been perfectly fine getting out here and just sitting on my hands. But we didn't break. Then we had a higher low, we had a higher low, we had a higher low. So right here, we creeped that higher low, right? So then it was like, well, you know, we could stay in, we could get out, we could throw the stop up. And I think we did, right? We put a stop somewhere around 86 and change, right? So if it breached 86.32, it's like, all right, that's a wrap. But look, now we're back into 10,000 again, you know, and we start approaching that level where we start pushing into the larger swing fail. Then it's time. Then it's time to go short, right? And that's this play here on the back end. Is it this one? Yeah, I think it's this one. So on the ultra back end play, which is over here, right? This is the move back up. So we'd have to go all the way back here. Yeah. So we have to go back here, right? You see the aggressive move to the high side, the drop down to the 200 push, or down to the 350, up to the 200, drop down, get this move down here. Now that's that low level. That's the short that we took. Then we push all the way back up to this level over here. And then at that point, we're looking for the next short all the way down. That's a lower low. The difference with this low here is it was so dramatic that if our low actually capped around like 6 and change, right, then the next low could have been a 38.58. Right, but now if we are going to get low over here, I'll be looking for a swing fail to maintain this sim try, right? Because that symmetrical triangle is huge. Price comes up, bang, 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 right? You're ready to rock and roll here. So it's a beautiful pattern. It's a beautiful pattern, very well respected so far. You only got 2 touches down to the bottom, so we're not validated yet on that level, and only 2 touches on the top, so we're not validated yet on that level either. You'd like to get a touch to the top, touch to the bottom, and then you got a 6 point. From a 6 point, you can break either way. All right? So that would be the reasoning behind that. All right, let's see. Sure gonna miss your metaphors. Thanks. You want to buy an umbrella? Very nice. How much would you pay for this pen? How do I add the indicator MA for volume? Just click on your volume and then volume MA. Right? So like if you have volume, which is vol, right here. So turn on your volume. You can go to settings. You should have a volume MA right there, right? And just pop that on, and you're good to go. Now remember, on this one, I've changed it to 30 days, right? And so just go to inputs and MA length. I changed mine to 30, and the reason for that. You know, it may be unorthodox, but I don't care. Like, some rules are meant to be broken, and this for me is one of them. I want to know what the average volume is over the course of the last 30 days. That's all. It's a very simple request. I don't care about 14 days. That's 2 weeks. I don't care about 20 days because we don't trade a 5-day market. We trade a 7-day market. 20 days being the default average is a month, right? In the standard world, where you have 5 days a week, Monday through Friday, and you trade that out. 5 times 4 is 20. Bang, there's your average, right? So you're looking at essentially a month of trading. But in crypto, a month of trading is a month of trading. So I changed it to 30, and I like it. I prefer it better. Now, I didn't change it on these charts over here. This is still at the default 20. I probably should change it. What the hell? Today's the day, right? We're going to change it. We're going to see if we like it. But that's it. Yeah, just double click or just go to settings. Let's see. Penguins from Mr. Corona. Very good. Mark Asara, good morning to you. Mr. Orlando's in the house. Very nice. Just here to say goodbye. Orlando's here, and he's like, get the hell out of here. Thank you, Orlando. It was always a pleasure having you here. Could you give me your thoughts, KN? Oh, KNC USDT. Yeah, we got to do ERD, and then, yes, we'll do KNC for sure. Geez, I forgot that long. Yeah, but again, like, remember, so that's a swing trade that turned into a very long trend trade. And you essentially just follow the trend. Again, I could have gotten out at that first major swing fail, but I didn't. Structure levels weren't broken, so I just stayed in. Let's see. How can you set up to enter a trade on a breakout, please? Yesterday you talked about it. Could you explain? I explained it yesterday. Yeah, it's a stop buy order, right? It's no different. So look, let's say here you want to buy. Let's move it down here. So right here you came up, you made a high, and then you pulled back to the 20, and you're like, all right, well, I will buy the breakout, right? So you say, as soon as that thing breaks out, I want to buy it. So how would you set up a trade for the exchange to trade in your place if you're not around and automatically trade it? You set up a stop, right? It's just a stop. When people hear stop, they automatically assume they're getting out of the trade. That's normal 9 out of 10 times. But it's not the only way you can use a stop order, right? All a stop order is a plug. It's a Band-Aid. It's a temporary hold before you let go. It's the safety on your pistol. That's all it is. The second that stop is triggered, your order goes live. It goes into the book. Right? But before it goes into the book, it's held back. Here's your order. Your order's right here. And it's like, I want to go, I want to go, I want to go, I want to go, I want to go. And the stop's like, no. You're stopped. But then when that stop gets triggered, there is nothing holding this order back. Foof, and it goes right to the book. All right? So all you do is you're just going to place a stop buy. So it gets triggered here, and you just do a market buy. You buy the entry. You go long. You just buy it. That's it. There's nothing crazy about it. It's just that most people don't use stops that way. But I'll use it on a breakout of momentum. Right? So like we were talking about the other day, how one of the dudes in here was missing the retest. He's like, the thing just runs away. I don't get the retest. Like, well, how can I solve that? So then buy the breakout. Just, it's aggressive. It's aggressive. And when you lose big, right? Because that thing could easily tank and go the wrong way. Because why? How many times do we talk about confirmation, right? You're not giving it any confirmation. So you can't necessarily expect it to work all the time. It won't. All you got to do is go back and check the history on the chart and be like, would it have worked? Would it have worked? Would it have worked? Would it have worked? And, sometimes yes, sometimes no. But if you wanted to do that, just set a stop buy. And you're in the trade. All right, Zen BTC. Okay, so we got to do ERD. We got to do KNC. We got to do Zen. Trading look like Viz Astronomy. RL, what's going on, buddy? Thank you. Yes, I will miss you too. Got it. Daniel Guzman's got it. Okay, very good. Bien, how do you find charts to look at? What? How do you find charts to look at? I don't know what you mean by that. And then ETHUSD. Okay. Explain what you mean, BMW, and then we'll take it from there. All right. So ERD, obviously, if we just look at the moving averages on the daily, I mean, it's beautiful, right? On this earlier trade over here, so you see the break. This is where just fundamentally understanding price action can really help you, right? So, price came down. And then it went sideways, right? It dropped down again, but it held that level. It pushed up and it got rejected lower than the previous high and then dumped. But now from that dump, if you take a look at this level here, and when you break that level, you have a fairly good opportunity ahead of you. Now, again, we got the same thing going on with Bitcoin at the moment. This, in Bitcoin terms, right, is 10,428. Okay? So think about it like that. That's 10,428. We can see an opportunity where price comes down, it hits that 10,428, and then it just dumps. Right? And this would have been a fairly good example, except this resistance was much higher, right? But still in that same general vicinity. However, this broke, right? So this gave you the opportunity, and we got it right here, right? So you see that move here. You come out of this zone, you're pushing up, you retest that bottom side level, confluence of a 423, which was this lower move over here on the quick break. That gave you your 1, 6, 2, 6, 3, 6, 4, 2, 8, 2, 12, and it hit all those levels. On top of that, structure level of 1548 was a 423 confluent level. 2246 was a confluent level over here of your 236 and your 8236, almost to the penny. Your 423 off this breakout play, this was the breakout play move, right? That 423 is in confluence with your 127. Again, more levels, more confluence, more coinciding variables, the best way that you can go. Right now, this high over here, I believe ERD may have more history on another chart, but and again, ERD is not that old. So now, from the high side to the low side, now we extend this out. So now it's time to put the bigger extensions on here. So now we got we don't want that. We want this. There we go. So now we have our much larger, from our high, and we're not using the opening wick because that's BS, right? We're going to use actual price action, which is over here. So we're looking at a 1-1, which you already crossed. A 1-6, we already crossed, and it's a good level because look at the action at that level. Come over here, drop this on, and see what happens. Price comes up, it gets resistance, comes back, it retests it again, makes a new high, comes back down, retests that level, off to the races. Where did it go? 2618. Right? What's the next level after the 2? Come on, don't be like that. After the 2618, you're 423. Now, why do we have the 3618 if we rarely ever use it? Because once in a blue moon, price will come up to the 36 and fail miserably. And if and when it does, right, then you're not even looking at the 4-2 anymore. So it just gives you like a barrier, soft cushion level. It also gives you an exit prior to the 4-2 if you don't have any other like confluence and things are starting to look weak, right? So if you're starting to show like exhaustion, like your your MACD is starting to die, your RSI's in like a massive swing fail. Now look, this was a swing fail on the RSI, right? But that continued up. And you broke that south level, only for like a second. Momentum's all over the place at the moment, which is okay. But yeah, ERD is cruising at the moment. Target level right here, 29,947. All right, then we got to do KNC, right? KNC USDT. KNC USDT. That doesn't look right. KNC USDT. There we go. Need a little bit more history, so we had to go to OKX. KNC failed at the top side here. Swing fail, dropped down. So far, double bottom at the moment. But this could easily come all the way back to this trend. Now, ADA didn't, right? ADA broke. But just like ADA, this had a lower level over here, right? At one point, it was over here, but now it's a double bottom, right? That candle is not printed either, so you have to wait for that daily to actually close. And right now you're looking at that. So as far as the daily is concerned, right, you're not doing anything below this level. Double bottom potential. I'd probably look more to the 50, but you did just cross your 721. Not confirmed yet until this candle closes. Look at the whole trend. Last time you crossed was in this mess over here. But the bigger cross after the trend was right here, right? And what did you do? You come down in the 50, you held it, You swung, look at that nasty wick, all the way down to the 200. Massive retest structure level, push all the way back up, but ended up continuing in this sort of failure pattern until you got back to trend, and then you pushed up. You continued with the swing fail, shorts all day long until you finally broke out, and you didn't break out till over here. So you're potentially looking at the same thing, right? We were looking at this level a long time ago, so now we got to drag that up over here. Potentially the same thing. You don't want to lose that fast. You don't want to use the fast MA. So the 721 crosses under. You start looking for, potential shorts, exit the trade. You can see what everybody else is doing over here. Momentum's total garbage. This thing's been dying. So here's your high, here's your high, here's your fail, here's your high, here's a lower high, and then that's confluence. So here's your divergence, and here's your confluent factor. RSI's dead, under 50. MACD looks disgusting. Right, so K and C, I'd stay away from longs for KSC until you can actually prove you're back in a long. And by that, at least straighten the 7 up over the 21 and push up over this swing fail. Otherwise, I'd probably call this tired for now. Zen BTC. So, Zen. It's been a while since we looked at this chart. This isn't the right chart either. That's the right chart. Well, that's one of the charts. Still on our way to D, 423. All the way up here at 1657. Slowly making its way there. Thought I had another chart. Guess not. Zen USD, I probably got a bunch of charts. Not so much BTC. So, still have this level to contend with if we get up there. Currently, what are we looking at? Let's see. From the break, we hit our 1.4. We hit our 1.6. So, this is done. From this break, we pushed up. We hit our 1.1. Oh, yeah. All right. We got capped at our 1.27. Created the swing fail. Price dropped back down, but it maintained a higher low. Breached it all the way back to the 1.2. Got the 1.4. Did not get the 1.6. Got caught up at the 385. All right. So we can get rid of this here. And we can move this now to the bigger picture, which is up top. Okay. So now that we've done these the baby moves over here, these little impulse moves, those are all done. We broke this swing fail, right? We smashed that 1-2, and we're crawling up the ladder here, right? So we're just walking up the moving averages. Got the 7, right? You got the 21, you test a 50, you fail, you come back to the 20, you test 100, you break it, you test a 200, you break that, test a 300, then you fail at the 300, you actually walk it all the way back down. Now you're back on the 50, which is 7 and 21 combined. Break the 1 again, test a 2, 2 to 1, 2 goes up to 3, 3 goes back to 2, 2 then goes up to 385, and 385 back down to the 2, or back down to the 300 right here. So the next move right here is to push up and then walk the fib levels. So again, 236, 382, 50, 618. Big level here at the 786, whether you're going to get rejected and go all the way back down or never get there in the first place. And that would be if your 618 ends up bringing the pain. So let's take a look at this. And let's see what we got over here. So RSI slowly crawling up, but it's a good trend nonetheless. Now you did break. Now this is a fairly large distance in between the two. I wouldn't be looking at this as an RSI swing fail, but you can. And if you do, then, time to go short would have been right here. The conservative short, which, it might be better to be conservative on this one because you may never come down there, right? So that's an idea. If RSI swings back low, you would exit your long positions, enter a short position. MACD right now is in bullish territory, has a crossover above bullish territory as well. Momentum, I'm not very excited about. It's a very, very, very slow build. It's pretty good in comparison, but it's just a very, very, very slow build. It's okay. It was looking to fire. I believe that's a loose fire. And that was way back at July 15th. And that would have been for longs. So July 15th would have been back here. And that would have been a long fire entry over here. We would have got an entry over at 81.55, give or take. You can see right now you failed at the 50. 50 pushed down, and it brought it back to the 382. So now from the 382, you're looking for the 618 and then the 786. So Zen's okay at the moment. It's still alive, right? It's still moving. So that's good. Let's see. Gotta. ETH USD. ETH, we're getting there. Very close. Looking for a rejection. Actually, no. This time we are looking for it to break through. We rejected once, rejected twice. We're looking for it to break through this time. This time we're looking at the 127 at 344. So really nothing's changed on ETH since we look at this every night. No change on ETH. Same thing. Still looking at the same level. Let's see. May we get a peek at a couple of your favorite fib temp? Oh, yeah. We were supposed to do. Yeah, we ran out of time last night. Yeah. So let's pop into. So for templates, first let's find a clean chart. Sure, we can find something. VeChain. Sure. Sounds good. Not enough history. No history. Jeez Louise. All right, let's find a different. Let's do USDT margin. Okay. Let's find something with a little bit of history here. That's fairly clean. That's pretty clean with very little history. Okay, so Tron. And we'll just wipe it clean. We'll get rid of everything. We'll get rid of these moving averages as well. Okay. So, as far as fib templates go, like I know I have a lot of them. Some of them are just used for different things. So, first, the easy one, or the basic one for me. First, let's say, what you have to understand what you're using it for. Like what are you actually looking for when you do it? Are you looking for areas of resistance? Are you looking for areas of support? For a situation like this, you could draw that whole level down, and you're looking for a resistance zone over here for potentially either further downside or break that level and continue back up. So, grab that high, grab that low. Let's zoom in over here. What we're looking for are these levels, right, as we come back down. Now, what I do on some of these, just to make life a little bit easier, I color my 618 and I color my 706. Some of them I'll color my 786, right, just to have a better idea on what's going on in that general vicinity. Some of them I don't even have a 236 on at all, but that's because I'll be looking for something specific. Now, in this case here, right, price came up, it ripped through the 236, so the next level of potential resistance is the 382. You can see you never even got up there, right? Price just never made it to the 382. You can just drag a line across and say, okay, well, price never made it over there. But it did make it to 236. Sort of held it for a little while, lost it, rejected it, came back, broke it, lost it, broke it, lost it again, and then down you went. So in an effort to keep this somewhat clean, see how I got like a 1, 2, a 1. I don't need any of those on this. So for me, I just have one called Black Red 618, and that's all it is. Just black, it's red. 618 is the only thing that is colored here. So I can look at this without any numbers, and I can know exactly where I'm at. And I just alternated, black, gray, black, red, right? Black, gray, black, black, right? So, I know where I am on this at all times. I like to, I didn't go back and do all this, but I like to get the trend lines out of there. They can be confusing. So this is a situation where the only thing I really need, right, is the 0 to 1, but I sort of highlight my 618. If I was looking at, So if I was looking at the larger picture, this one, all the way down here, and I'm looking at a much bigger scale, right? Well, see, this never did it. But if I was looking at a much bigger scale where this was looking to approach these levels and get extensions, then I would throw my extensions on, right? So BR with extensions. Now in here, I got the black, I got the red for the 618, right? But then, you know, I threw in the 706 as a green target level area, and then a push. So the 1, 2, 1, 4, 1, 6. Now, if I'm looking for like targets for like a larger trade. So this over here is a fairly classic trade I would take, where prices come down, it pushed up, and then right here you got a swing fail, right? So we look at this swing fail to the low side, right here. Now we know that this area is resistance, right? So once price breaks that level of resistance, right, I'm looking for that next big move. And I'm measuring the next pullback. So for me, I would measure this right here because price broke that level. It came up and then it started to come back down again. So when it came back down again, I want this move over here. So I'm looking to buy that. So what I'll do here with these fibs, I'm measuring just the move. And this level over here, I don't care what this reference is to down here or down here. I care what the reference is to the latest move. I want the 1618 or the 423 off of this move, off of the pullback, not off of this pullback, not off of this big play, not off of these highs over here. I care about this very local action. And when I do something like that, I'll come over here and I'll go to what's called targets. And targets just clears the noise, right? I don't need any of the other crap. I just want a 1618, a 2618, a 3642, and then on the high side, an 82 and a 73. This allows me to look for larger take profit areas and clean up a lot of the clutter. Instead of having this whole thing mashed in with all these numbers that I don't care about, right? I don't care about any of this until a 1-to-1, period. Right? So, you know, I'm just not worried about any of that stuff. Now, let's say over here, we have a potential cup and handle, right? So you got, like, again, this is like major violation, so it's not really something I would ever use, but let's just say, for argument's sake, we got a cup and handle. Now, my cup and handle one that I currently have is set for black background. Well, all of these technically are for dark backgrounds because I don't use white backgrounds. Anyway, that being said, you're looking at the high side here, which you can see it obviously didn't play out, right? Because you'd be looking at a handle, but that's not the top of the cup. The top of the cup would either be here or the top of the cup would be over here. So that's a bad example. But let's say this is a potential cup and handle. So I don't need this crazy fib over here that tells me, you know, my standard, or just go to the default, right? I don't need the standard default fib, right? It's not telling me what I need to know. What I need to know on a cup and handle is exactly what I put in the cup and handle. Now, again, like, you know, this is for a black background, so let's just make every color one color, and we'll just make it black. All right, and is this my broken one? Yeah, of course. So hold on here. You need this too. Okay. Oh, son of a... Okay. Perfect. And there we go. All right, so a traditional cup and handle, you're looking at it in a few different lights, right? You want price to be around a bottom. Now, again, this isn't a great example, but it's an example. Now, I use cup and handles in two different ways. One, I look at them as an extension to an Adam and Eve, and that means you would have to have an Adam over here, which is like a V bottom, which we don't have in this case, which means we're not looking for any pullback. We're just looking for a breakout. And then a traditional cup and handle where you're looking for a pullback. Pullbacks for me, now this doesn't look like the right one. It's the problem when you have a lot. Sometimes you're going to get the wrong one. Let's get rid of that. I do have the -1 on here. Very good. But let's change everything black. There we go. Okay. And what we're looking for here are three separate pullbacks, right? Pullback number one, which would be your 236. That's considered shallow, right? Or actually, sorry, 382, considered shallow. 50 is considered average. 618 is considered medium. Now, I don't know why it's not on here, but so what I should have on here, no 236, no 786. You don't need those because you're looking at just a cup and handle. You're looking at just these pullback levels here, and you're looking at the -1. You say, well, why the -1? The -1 is to give you your target level. It just saves you from coming over here, measuring out this, and then coming over here, and then just dumping on there. It's a 1-to-1. It's a 1-to-1. There's no reason to remeasure it all out. You know what I'm saying? There's no reason to do that. So what I do is I just throw it on the fib. I'm already putting a fib down anyway. I'm already looking for these target levels, right? So why am I going to put that on there like that? There's no reason to. So I just don't do it. So I put the -1 on there, and then I know right off the bat, right? I swing this over. Now you can do it like this as well. It doesn't really matter. You just have to make sure that you put this fib on upside down, right? You're starting down at the bottom to the top, right? Instead of the top down to the bottom. So you're coming from your low to your high, pull back, where you can either have an average, a shallow, an average, or a deep. And then you're looking for the 1-1 break from the low side of the bottom of the cup. And that'll give you your target area of whatever it is at wherever you are. In this case, it'd be 2214. And then I have my harmonic ones. So, like we have, so on Bitcoin, we're looking at the crab over here on the 4-hour. So I have what I use for these, because these have sometimes like wildly different targets. So common in harmonics is like a 113, and you're generally not going to get that in standard action. Plus like a 224, that's not exactly all too common, and a 314. So these are in addition to your standard 1-1, 618, your 50, your 382. Now you'll notice this one has no 236 because there's no harmonic pattern of like the 6 or so, advanced ABCD patterns that uses a 236. So they all start more or less, no less shallow than a 382. But this also, like, I made this one like very colorful. So it's very easy to tell because when I drag these apart and I'm checking these levels, I can see very easily where I'm at. So this one I use specifically for harmonics. And then I have other ones that I use, then I have other ones that I use specifically for other stuff. So this one right here, 350 DMA thesis. So I just made this while I was doing that thesis that we just looked at earlier on the 350 daily moving average, right? And because it only had I only needed the levels I needed, and I colored them in a way that separated it from anything else I was doing. So instead of like redoing each one of them, it was pointless. And then down here, you'll see all these like slate, right? So these were all because, I went to a different background and I was doing videos. So for those videos, I had all these, different ones I redid, and I sort of like changed all the backgrounds on them. So anything that says slate is just my standard 1-0, right? It's right here. And then you have down here is like slate black targets, right? So it follows the same thing. For me, I'm an old fiber guy, so blue, orange, green, brown, slate, white, red, black. That's like the color scheme that I use for a lot of things. And then globals, right? Global up, global down. This is if I'm doing a chart, and that chart for me is something that's going to be like a dedicated chart. So I have levels that if I'm going to look at something over the course of, a few years, I'll go back and it'll be like, all right, I'll have my global up, my global down, like we did here on the daily, right? Like we did here on the daily. See how, again, I follow my same color scheme. Nothing really, they can't do that. Nothing really wild here. Blue, orange, green, right? It's like blue is your all-time high down, right? Orange is your low, your pullback, your failed rally, right? And then green is your next rally down. Right, so so long as I maintain something with a little bit of consistency, it's very easy for me to get back on a chart and sort of see what I was doing, where I left off, and that type of thing. So I would suggest you cater them to yourself and cater them to your needs. So if you find yourself putting the default one on and having to change a lot of stuff, then change it. Change it for you. You know what I'm saying? And if you do a lot of like patterns, like change it to just the patterns, you don't need to see all these other like wacky levels. Get rid of them. Just clean it up. Does that make sense? All right. Maybe we got a couple of here. Yeah. Okay. So those are 50. I have down your break resistance 618, and I think I have your targets fit, but any others you commonly use? Umbrellas, penguins, rain, charts. Very nice. How do you find good charts to trade? Yeah. Good trades to trade. Yeah, for sure. We'll go over that probably another day. We're over today. We're going to talk about scanners starting next week. So starting tomorrow, actually. So long as that we have time. Can you take a look at AVA? All right, we'll take a really quick look at AVA, and then we'll wrap it up for the night. Let's see. AVA BTC. Let's see. AVA's crushing up to the 823 and found resistance. So the next target level, if it can hang, is 1273. This is a massive consolidation out of here. So the good breakout play already happened. Obviously, that was way the hell down here. Volume's up. MACD's crushing it. RSI's still going. Momentum's good, but it is trickling down, so you have to be somewhat careful about that. But the actual push over here is okay. Let's see where we're at with our 7. Plenty of room from the 7 to the 21. Now, watch how many times this thing hits that 7. It gets extended, it goes sideways, tag the 7. Gets extended, goes sideways, tag the 7. Right? So now you're extended again, you're sideways. You know, you could potentially tag the 7 again tomorrow. So I wouldn't be looking at getting this anytime soon unless you're already in it. Next target level, like I said, would be 12.7. So you got plenty of room between now and then. So yeah, maybe AVA BTC might be decent if you're already in it. If you're not, now I'd probably stay away from it. But potentially a quick trade if you scalp the 7, maybe today or tomorrow at some point. There's a possible way to keep in touch. I mean, I'm on the Discord, like I'm in like Discord. So yeah, I mean, I get DMs. I don't think that will go away. Please TA on next XLM link BTC BMW. We'll do those tomorrow. That's 6 charts, and we're already wrapping it up. That's not going to happen at the moment. Super late, but hello, Edmund Kim. Very nice. Keep doing great things. I hope wherever you land, we could track you via YouTube, Twitter. Yeah. I mean, I'm not dead. I still have a pulse. Yeah, the BR is black red. Oh, you didn't know that. No, that's just black red. Yeah, super easy. Very much appreciated. No worries, man. And Mark Eyes, you are very welcome. All right, everybody. That will wrap it up for tonight. So for Monday, for Bitcoin, I mean, we have a few things to look at here, right? If we do end up pushing 10,395, you already know for me with that crab, I will likely go short. I'll take that hopefully as a longer swing trade because I don't really want to be monitoring stuff. I have a whole lot going on this week. So, if I can avoid it, I will. Otherwise, I don't mind waiting 7 days and seeing where the weekly ends up at. If it does do what it's done the last 2 times, believe me, I will not be one bit surprised if this thing is below the all-time high 382 by next Sunday. But we'll see, right? We don't want to judge it just yet. This is a break and close of the 382. It's just that they lost. They lost any credibility that they once had. So a break and close over this level doesn't mean what it used to mean because they failed on it twice before. So now they have to prove themselves, which is going to take 7 days. Which is kind of annoying, but it's all right. If you're aggressive, then you'll get into the trade early. If you're not aggressive, then you'll probably wait out the week unless something smoking comes along. A break and close above here on the daily, and then all of a sudden, you could be looking to go long up to that retrace 786 back to the 726 zone. So we'll see. All right, everybody. Thank you as always for being here. Always a pleasure. Always a good time. Hopefully everybody has a good rest of the week and a great week coming up tomorrow. Same time, same place tomorrow. I will see you there. I want to see you guys